JP Morgan's surprising move, can it help rebuild Iraq's economy and boost the Iraqi dinar? Welcome back to IQD to VND, your go-to destination for deep dives into global currencies, economic reforms, and what really moves the market. If you're new here, make sure to subscribe. Our mission is to hit 400 subscribers by the end of April. Let's grow together. Now, let's dive into something fascinating and potentially game-changing. Iraq's bold economic resurgence. A new chapter begins. After enduring years of war, sanctions, and political upheaval, Iraq is writing a new chapter in its economic story. The country is emerging from instability with a determined focus on rebuilding and revitalizing its economy. With one of the largest proven oil reserves on the planet, Iraq's potential for growth is undeniable. The Iraqi government is actively pursuing international cooperation to develop critical sectors, such as infrastructure, education, healthcare, public services. But here's where it gets really interesting. JP Morgan, one of the most powerful financial institutions in the world, is stepping onto the Iraqi stage. Why is a Wall Street titan like JP Morgan betting on Iraq? Let's unpack the strategy behind this unexpected move. Why is JP Morgan interested in Iraq? At first glance, Iraq may seem like a risky venture for foreign investors. The country has a history of instability, a fragile political landscape, and significant currency-related challenges. But JP Morgan sees opportunity where others see risk. 1. Iraq's oil wealth is irresistible. Oil remains the backbone of Iraq's economy. With strong global demand and energy prices holding steady, Iraq stands as a lucrative investment destination. JP Morgan is likely betting that the country's oil wealth can fund long-term returns if infrastructure and governance continue to improve. Second, development projects need funding. From highway upgrades to modern hospitals, Iraq is launching massive development initiatives. These projects demand not only financial investment, but also international credibility. A partnership with JP Morgan provides both. 3. Strategic financial influence. JP Morgan brings more than money. It brings credibility, global standards, and elite financial expertise. Their involvement sends a strong message to the global market. Iraq is open for serious business. The Iraqi Dinar, a currency. Under watch one of the key issues investors are eyeing is Iraq's currency, the Iraqi Dinar, IQD. The Central Bank of Iraq maintains a fixed exchange rate for the dinar. However, many experts argue that the official rate doesn't reflect the currency's real market value. This raises questions. Is the currency overvalued? Is there manipulation? What happens to investments if the IQD suddenly revalues or devalues? These concerns make Iraq's monetary system a wild card in the eyes of global investors. How JP Morgan manages risk in unstable economies. So how does a conservative giant like JP Morgan justify this move? 1. Expert analysis. With vast resources, JP Morgan deploys teams of analysts, economists, and risk managers to assess the situation. From inflation trends to budget reforms, they evaluate every factor that could impact investment performance. 2. Focus on transparency. They're also likely monitoring Iraq's progress on financial transparency. Measures like clear reporting of national revenue, independent auditing, stronger banking regulations are key to building investor trust. If Iraq can prove it's serious about cleaning up its financial system, it could pave the way for sustained foreign direct investment (FDI), public-private partnerships, a smart move. Rather than diving in solo, JP Morgan may choose to partner with local banks or participate in public-private ventures. This strategy offers multiple advantages: shared financial risk, local expertise, lower exposure to political disruption. These partnerships also help Iraq by introducing global best practices, project management systems, and financial accountability frameworks. The bigger picture: long-term benefits for Iraq. If these efforts succeed, Iraq could witness massive job creation, new infrastructure, better healthcare and education. A more stable Iraqi dinar increased foreign confidence, and ultimately, Iraq could transition from a high-risk frontier market to a rising star in the Middle East. Let's shift gears. What's happening in Vietnam? Across the globe, another fascinating currency development is unfolding, this time in Southeast Asia, particularly in Vietnam. U.S.-Vietnam talks on trade and currency. Recently, the U.S. Secretary of the Treasury, Scott Bessent, met with Vietnam's Deputy Prime Minister to discuss reciprocal trade, a policy that ensures both countries benefit fairly from their trade relationship. But a central focus of the conversation? Vietnam's exchange rate, a delicate balancing act. The U.S. has long expressed concern over Vietnam's undervalued currency. A low exchange rate makes Vietnamese goods cheaper in the U.S., but it can harm American producers. The U.S. wants Vietnam to allow its currency to rise, even slightly, to level the playing field. What happens if Vietnam raises its currency value? Pros: encourages product quality improvements, attracts foreign investment signals, economic maturity. Cons: could lead to inflation, might make exports less competitive, may strain low-income Vietnamese families. Careful reform is key. The Vietnamese government must walk a fine line, balancing international pressure with domestic priorities. Rapid change could hurt small businesses, but thoughtful reform can build a more resilient, respected economy. The U.S. emphasized the importance of dialogue, transparency, mutual benefit. It's not just about currency, it's about long-term cooperation and shared prosperity. The global trend, resource-rich nations on the rise back to Iraq, its story is part of a larger global shift. Nations rich in oil, minerals, and agriculture, but burdened by political or economic instability, are beginning to attract major global attention. When financial giants like J.P. Morgan start investing, they don't do it lightly. Their involvement could be a signal to the world that Iraq is finally stabilizing and could soon become a regional powerhouse. Your voice matters. Let's talk. So now, we turn the conversation over to you. Do you think J.P. Morgan's move will truly benefit Iraq? What do you make of Iraq's and Vietnam's currency situations? How should global financial institutions balance risk and opportunity in emerging economies? Drop your thoughts in the comments below. If this article helped you understand the bigger picture, give it a thumbs up, subscribe to our YouTube channel, and join us every week as we break down the forces shaping our global economy, one currency, one investment at a time.